Hi everybody, welcome back to the channel, and today I thought we'd talk about investing in real estate and a Roth IRA. Now, when you think of Roth IRAs, you're probably thinking of stocks, mutual funds, ETFs, and all of those Wall Street products, right? Well, the truth is you can pretty much use a Roth IRA to invest in just about anything. Not quite anything, we'll get into that in this video. But I did write this guide earlier, the complete guide to real estate investing with Roth IRAs. I encourage you to check it out. And what we're talking about here is how you can use this to basically get tax-free income into retirement. Okay, so, depending on what age you are. So really what it comes down to is qualified distributions with Roth IRAs. And that generally means you're past the age of 59 and a half. And when we're talking about real estate and Roth IRAs, keep in mind that we are not talking about real estate investment trust, okay? So real estate investment trusts, they trade on stock exchanges. I actually just made a video about one of my favorite REITs. That video was made yesterday or 2 days ago, I believe. And basically, investing in REITs is a great way to get invested into real estate, no doubt. But we're actually talking about investing in physical real estate in this video through a Roth IRA. So you can also use a regular traditional IRA. However, keep in mind that when it comes to retirement and you start taking those distributions, you're going to have to pay taxes on them. So when it comes to a Roth IRA, those distributions are going to be tax-free. So that's one of the main benefits of using a Roth IRA to invest. And of course, when it comes to real estate, it's the same thing. So picture it like this. You have a property that you purchase within your Roth IRA. Say it costs $250,000, okay? So you put $250,000 on the line to buy this property. And when you do that, your Roth IRA so basically how it works is you would first set up a Roth IRA with a company. So these are known as self-directed Roth IRAs. And then through that company, you would use that to actually buy the real estate. But let's say you have like $250,000 that you want to invest in your Roth IRA into a property, let's say for rental income. So how it works is you purchase the property. It might involve setting up an LLC, but essentially what you do is you purchase the property directly within the Roth IRA, and what happens is that property is completely tax-free within the Roth IRA as long as it remains sheltered. That's the key consideration, is that it has to remain sheltered within the Roth IRA. So the other part of it is you cannot use the Roth IRA for your own benefit. The real estate within the Roth IRA must remain for investment purposes. Now this could include, like we were just talking about, a rental income or fix and flips. So you can use this for pretty much any type of real estate strategy. The two main ones are going to be rental properties and fix and flips. So as we just talked about, it involves setting up a self-directed IRA with a custodian that would offer real estate investments. There's a lot of these companies out there. If you do a Google search, you can type in self-directed real estate Roth IRA, and I'm sure you'll find some company, and you can do your research on which one you want to go with. But basically, they will set that up for you, and then you can either roll over your previous, IRA, 401k balance, whatever you have. But essentially, you would open an account with them, and then that would be used to buy the real estate. So they would essentially be acting as the custodian on your behalf and managing the property for you and everything. And then what you can also do is set up what's called an LLC, which we talk about here, I think, in maybe section 2. Here it is, LLC setup. This is optional, but essentially what you would do is you would set this up to manage the Roth IRA more effectively, and so it could potentially provide greater flexibility in terms of managing the property and streamline the process. But it's also important, obviously, to ensure you are complying with IRS regulations, and that's a big one. And really, when it comes to that, there's two main things to keep in mind. We have prohibited transactions, which violate IRS regulations, such as using IRA funds to purchase a property for personal use or selling property to close family members. So this could lead to significant penalties, including the disqualification of the Roth IRA altogether. So I'll give you an example. Let's say I have a relative who wants to take a vacation down in Florida, and I just use my Roth IRA to buy an investment property. But I really don't plan on using it for investment properties, or for, let's say, a rental income or fix and flip or something like that. Instead, I'm just going to go ahead and, kind of maybe have my relatives use it. Maybe they'll pay me on the side, you know, for using the condo or the investment property, whether it's a house or whatever it is. But, you know, maybe they're going to use it, and then maybe I'm going to go down there every now and then, you know, let's say down near Destin, as an example. I'm going to go buy a condo, but instead of using it as an investment property, I'm going to keep it in the Roth IRA, but I'm going to go enjoy it myself. I'm going to go, you know, take a couple weeks off every now and then, and I'm not going to pay any taxes on it because it's all within the Roth IRA. So that's the big dilemma, right? So we have prohibited transactions and also, you know, disqualified persons. This also kind of goes in line with all this, but essentially, you know, the IRA owner. So if I set this up, it's my Roth IRA, and then I want to benefit from it, it's not allowed. Same with, you know, descendants, their spouses, relatives, pretty much anybody. You know, it could be a financial advisor managing the property, but essentially anybody who would benefit or potentially benefit, who's within your circle, relatives, friends, financial advisor managing everything, whatever it is, it can't be done. And if the IRS finds out about it, then you could essentially have the entire Roth IRA disqualified, and or at least the real estate portion of it would be disqualified, and you would owe taxes on it and penalties and interest as well. So the other portion to keep in mind here is the UDFI and UBIT. Okay, so this is unrelated debt financial income and unrelated business income tax. These are important considerations, and so essentially what this involves is using the Roth IRA to purchase real estate. And what you're doing when you do this is you're going into debt. So it has to do with non-recourse loans. So non-recourse loans can be used in a Roth IRA to purchase real estate, and you can go into debt. With that in mind, though, it may not be the best solution because there could be tax penalties. I would definitely recommend checking into this with your own personal situation, consulting with a tax advisor potentially, because this can get pretty complicated. But essentially, let's say you buy a property with part of your funds, or let's say you want to buy another property after purchasing one in cash. You could essentially use what's called a non-recourse loan, which means it's not tied to you individually within the Roth IRA. And then you have these, you know, things to consider with UDFI and unrelated business income tax are important considerations, but especially when it comes to those non-recourse loans, which basically means you're going into debt to buy property, okay, within your Roth IRA. So another couple considerations I would keep in mind here is that we're investing in real estate, right? We're not investing in life insurance, collectibles, arts, antiques, anything like that. Now, Roth IRAs generally allow you to invest in gold and silver bullion. There's a lot of different ways you can go about doing that. But when it comes to real estate, right, just keep in mind we're investing in real estate. We're not investing in collectibles or artwork or any other types of assets. So with that in mind, see what else we need to talk about here. So yeah, here's the general process for setting up a self-directed Roth IRA. We've kind of talked about this already, but what you would do is first choose a custodian, identify a custodian or a company that would offer these self-directed Roth IRA services and allow these real estate investments. Be sure to research the fees and reputation to ensure it fits your needs. Open an account, so complete the necessary paperwork, and then go ahead and, you know, provide the identification details and everything that you need to make this happen. And then what you're going to do is fund the Roth IRA. So basically, let's say you set this up with the custodian, you could transfer another Roth IRA over, or you could actually, let's say you have an old 401k you want to roll over into this, you could also do something like that. If it's a regular 401k, keep in mind the potential tax ramifications of doing so. If it's a Roth 401k, then you should be good to go and just directly roll it over to a Roth IRA that would allow the real estate investing. But then also, as we mentioned, you can establish the LLC, and so this can potentially provide more direct control over the property, but it must be done correctly in order to avoid those prohibited transactions and all the IRS rules and everything. So there's a lot of legal stuff to keep in mind here. But yes, it can absolutely be done, and you know, this is something I kind of learned about just in the last year. I didn't really consider it because, you know, Roth IRAs, you think about stocks, you think about mutual funds, you think about ETFs, index funds and things like that, but a lot of people don't actually consider that they can in fact be used to buy physical real estate, which is pretty cool to think about. But you know, keep in mind we're not doing this for our own benefit. Now, when it comes to retirement, right, so if you're past the age of 59 and a half and you're doing this, and you're making those qualified distributions, you can absolutely benefit from this, because at that point, the money's already tax-free. So it's only if you're under the age of 59 and a half and there's no qualified distributions going on, that's when you have to be concerned about all of this IRS stuff. But once you're in retirement and those properties are in the Roth IRA, at that point things are tax-free. So it doesn't even matter at that point. Even though it's going to be in the Roth IRA, you could take those distributions, say from the rental income, without having to worry about anything. And also, one benefit of the Roth IRA is that when you pass away, say you want to leave an inheritance to your heirs, right? Your family, your children, maybe your children's children, you want to leave a property in there for them to pass on. It can be done tax-free, right, within a Roth IRA. So there's no tax implications because of the fact that it's in a Roth IRA. So that is one major benefit of using a Roth versus a traditional IRA, where you're going to pay those taxes. And also with a traditional IRA, you got to keep in mind that you have those RMDs, or required minimum distributions, and so that's another major consideration. But yeah, let's keep going here. And these are a couple examples that I kind of talk about. So really, we're using an IRA here. It talks about rental income, and also talks about fix and flipping. So two different ways to go about it there. But when we're considering this, always keep in mind that it's important to consider your own situation, your own investing goals, your own risk tolerance. Work with experienced professionals if needed. On this channel, we talk a lot about passive income, and so you're probably thinking, if you're watching this channel, that rental income would be the best solution for you, if you're already tuned into my other type of content. But just keep in mind, there's a lot of ways you can go about this. You can do rental income. You can do those rehabs where you're actually taking money within your Roth IRA to fix it up. It doesn't necessarily have to be just a rental income type deal. You can also make money tax-free as long as it's kept within the Roth IRA by fixing and flipping and stuff like that. So always consider your own risk tolerance, your investing goals. All of these things are very, very important. Maintain enough liquidity in your Roth IRA to pay for unexpected expenses. If you have a renter and something breaks. So it's like just those sorts of things. Keep that in mind. Regularly, you review your investment strategy. Ensure that you're on track for your investing goals. I mean, this is just like any other type of investing when it comes to real estate investing. Same with stocks and bonds and ETFs. We want to make sure we're on track to achieve our own goals and objectives. So here's some common mistakes to avoid with real estate investing in Roth IRAs. The first one is going to be engaging in prohibited transactions. So using the property for personal purposes or engaging in transactions with disqualified persons. This can lead to severe penalties, including the disqualification of the Roth IRA. And then we talked about the UBIT. So if you're using borrowed money to finance a real estate purchase, be aware of the potential for UBIT, okay, or unrelated business income tax. So this could potentially be a tax. Essentially, if you're using a non-recourse loan, this might come up. So always consider your own situation. Consider working with a tax advisor if necessary. The other part is neglecting due diligence. So always perform due diligence before purchasing any property. This includes assessing the property's condition and understanding the market trends, conforming zoning laws, and everything else. And then also consider the fact that real estate is less liquid than other investments. So ensure that you have enough liquidity if expenses come up within the Roth IRA to cover things. Of course, you can still contribute, right? If you're contributing up to $7,000 a year, you can still contribute to your Roth IRA and max it out and use that. But with that being said, keep in mind that real estate is less liquid, and so you have to make sure you have enough liquidity within your Roth IRA to manage a property. And that really just comes down to keeping everything within the Roth IRA. So, always make sure you're keeping up to date with the IRS regulations, especially around this, because it can get very tricky. That's why it's probably important to work with a custodian on this instead of trying to do it yourself. You could, in fact, go out, set up an LLC, and do all the paperwork yourself. But I would recommend, especially if you're new to this, going through a custodian, a company who has all the regulatory framework set up on their end, and that way you're not getting yourself into trouble. You're staying in line. If anything, it comes back on the company and not you, right? So that's an important consideration. Keep all your records, keep your transactions and everything. This is going to be very important with IRS rules. Make sure that you're documenting everything. And then plan for taxes. There are situations like the UBIT we mentioned where taxes could apply. So plan for this carefully with a tax advisor to avoid any kind of unexpected tax liabilities. And then just to recap, guys, this can be a unique opportunity, but there are those risks to keep in mind. There's the tax considerations. Even though if you're doing everything by the book, it should be tax-free. But with that being said, it's definitely important to keep all this in mind. And with that said, guys, don't forget to consult with a financial advisor or tax professional, as we've already mentioned. But just a reminder, if you need additional guidance, this channel's here to help you. This website's here to help you. But sometimes sitting down with a professional can be the way to go. So just consider your own risk tolerance and your investing goals, and consider, if you need to sit down with an actual professional to go over this more. And then also consider the fact that this should really be in line with a broader financial plan for you. It shouldn't just be, you buy a property in a Roth IRA and that's it. You should really consider a diversified portfolio and what you're looking at in the long term, and if it fits in line with your investing goals and everything. So hope you guys enjoyed this video on investing in real estate within a Roth IRA. So yes, to answer the question, you absolutely can do this, but just keep in mind everything we talked about in this video, because it can get very tricky very quickly. And the last thing you want is the IRS knocking on your door saying that you have to liquidate the Roth IRA and that you're going to owe all these taxes on the property you purchased because you didn't keep it within the Roth IRA or you didn't follow all the rules. So hope you guys enjoyed this video. Let me know if you have any questions or comments. I will leave this article in the description. Check out dailyinvestmentadvice.com. It's your resource for education on the financial markets, recommendations and insights on a consistent basis every single day the market's open. So with that being said, guys, take care. God bless. Thank you so much for tuning in once again, and we'll see you guys in the next video. Take care.